The RSI momentum oscillator is designed to measure velocity and magnitude of price movements. Momentum is the rate of the move in price, and the RSI computes momentum as the ratio of higher closes to lower closes. So if a market has more or stronger positive changes, the RSI will increase and vice versa. The RSI is typically used on a 14-day time frame, which is what you can see in our example here, measured on a scale from 0 to 100, with high and low levels marked at 70 or 80, the high levels, and the low levels marked around 30 or sometimes 20. Traditionally, RSI readings greater than the 70 or 80 level are considered to be in overbought territory, and RSI readings lower than the 30 or 20 level are considered to be in oversold territory. In between the 30 and the 70 level is considered neutral, with the 50 level often a sign of no trend, but the 50 level is also often seen as both support and resistance for the indicator. Uptrends generally you'll find are traded between 40 and 80, while downtrends are often traded between 60 and 20. So our first example here is the euro. I've chosen this one because if I just scrunch it up, generally it's been going in a fairly sideways movement. So the RSI tends to perform, or be more useful at least, in these sort of ranging markets because they don't spend too much time in overbought or oversold territory. So if we go back to the beginning of the chart here, that's around February, I think, of this year. You can see the market started to sell off, and it came from an oversold situation. We were above 70, getting close to 80 here, and the blue line started to head lower in line with the market. Now, the RSI will tend to hit overbought or oversold territory quite often before the market tops or bottoms, and here we've seen it hit 30, but the price continued lower right through to the end of April. So we had another, I'd say almost a month and a half or so of continued losses when the RSI actually started to almost go higher. That's called divergence. I'm just going to draw a little line here to make that clear. The RSI started to diverge higher, which gave you a very early warning that we were getting oversold and we were going to turn up. But timing wise, this is very, very tricky indeed. Markets can stay oversold for a long time, and indeed you can get positive divergence in a bear market for quite a long time. So for timing purposes, this isn't the most useful indicator. Anyway, then the market started to turn higher around here. You can see that allowed the RSI to move away from the oversold area. We had fairly sideways movement, which was tracked fairly accurately with the RSI until we had this move up in the middle of June, and then we became overbought. So that worked quite well. We didn't hang around in overbought territory too long before the market sold off. We got close to oversold territory here in the beginning of July. Not quite hit the 30, but nevertheless we bounced off here quite nicely and headed higher. Again, we didn't quite get into overbought territory, but you can see that in a ranging or sideways market, it works fairly well, and it's probably worth keeping an eye on as long as you're using it with other tools that we go into in our videos. Just remove this line here, and I can then show you this divergence that happened towards recent months. Okay, there you go. That little trend line quite clearly shows that we had some negative divergence in that the RSI started heading lower while we were still heading higher in this area. That gave us an early warning that the market was running out of steam, and indeed we did sell off. We're just recovering now, and the trend lines do often work on the RSI as well, so it's worth keeping that trend line on. You can see we're just heading high now and starting to touch that trend line, and you may find that the market backs away from the trend line on the RSI. You can also see that the reading is 55, so we're sort of mid-range, and that may act as some resistance, as I said earlier, on this little bounce. So you can see that in a ranging market, this has worked quite well. It's not a bad indicator, worth keeping an eye on as we move between the 70 and the 30 areas, and even timing-wise, it hasn't been too bad. So RSI in a ranging market, not a bad indicator.